Hi guys, and welcome to this new YouTube video. In today's video we will be discussing how to find the perfect place for your stop loss. I'm gonna give multiple examples on Bitcoin, Ethereum, and I will also pick an altcoin where I will give multiple examples on how to find a perfect stop loss. You can find it based on price action, but we can also find it based on patterns that are forming on the altcoins and of course on Bitcoin. First of all, I want to say thank you to you all for reaching over 1,000 followers on Twitter. We are already over 1,100 followers, and I just want to say a big thank you to you all. So make sure to follow me on Twitter as well, because this is where I am giving the most amount of updates during the day. Not only on Bitcoin, but also on altcoins. So thank you for that, guys. Let's dive straight into it. So first of all, yes, we can look at Bitcoin, we can look at altcoins, and we can trade based on price action. So for example, we can see that right here, the price is finding support multiple times. We can also look at patterns. For example, if we go onto Ethereum, we can see that Ethereum is right now forming a symmetrical triangle. So we can trade based either on patterns like this, or we can trade either on price action, like we see right here on Bitcoin, for example. And for both ways, we have to look for the perfect stop loss. A stop loss is something you have to use on every single trade you take, and if you don't, you will get liquidated either way. It may not be today, but eventually you will get liquidated. So a stop loss is the most important part of a good trade, in my opinion. And if you don't use it, you will get liquidated for sure at one point. So for leverage trading, you have to always use a stop loss. And that is why your stop loss is the most important thing, because it can stop you out of a trade. So you want to find the perfect place for that stop loss. Okay, the first tip that I want to give you guys is don't look at the most obvious place for a stop loss, because that is where everyone is putting their stop loss, and that is where all the retail traders are putting their stop loss, and that is where the market makers will make the price go to take out those long or short positions, so to hit the most amount of stop losses and then reverse the price back towards the upside. Because that is the goal of the market makers and the whales, guys. It is to stop the most amount of people out of their long and short positions and then reverse the price back towards the upside or towards the downside. So that is something that you always have to keep into account, and that you always have to keep in mind, that you don't put your stop loss at the spot where everybody is putting their stop loss. So for example, if we right here go onto the daily time frame for Bitcoin, and we see this massive demand zone for Bitcoin right here. Let me extend it to the left and to the right. We can see that right here we have found support so many times for the Bitcoin price in this massive demand zone. Right here we went back to the demand zone a lot, and I mean a lot of retail traders put their buy orders or their long orders inside of this golden zone, inside of this demand zone. But what did the market makers do? They made the price go below the massive demand zone, and that is where everyone, and I mean everyone, and I mean the retail traders of course, had their stop losses just below that golden zone of support. The market makers made the price go below that golden zone of support, and that is what we call sweep the previous lows right here. Stopped those people out of their long positions because everybody had their stop loss right here, and then reverse the price back towards the upside. And this is where you could have taken some profits, of course. So that is already a perfect example of how the market makers work and how you have to think before you put your stop loss somewhere. Another nice example is this one right here. So we had this previous high right here. Then if we go onto the daily time frame, we had a daily level of resistance right here, because we can see the green daily candle followed by a red daily candle is a daily level of resistance right over there, of course. If you then go onto the 4-hourly time frame, we can see that a lot of people had their stop loss just above the daily level, But that is where everybody is looking to put their stop loss, guys. So what did the market makers do? They made the price go a little bit above the daily level, have them stopped out of those short positions, and then reverse the price back towards the downside. So what should they have done instead? They shouldn't have put it above the daily level, no. They should have gone on the 4-hourly time frame and looked at this 4-hour level. Green 4-hour candle followed by a red 4-hour candle is a nice level for a potential stop loss. They should have put their stop loss not above the daily level of resistance, but above the 4-hourly level. And that is where you have to use your mind, your IQ. You have to be a little bit smarter than the retail traders, of course. And this is where you should have put your stop loss instead of this one. That is where all the retail traders got stopped out and they missed out on some nice profits, of course. 7.5% loss towards the downside. So that is definitely something to take into account, guys. Okay, so what I then usually do after I have found a high term level of resistance or support, I go on to the lower time frame. So for example, the 5-minute time frame. And that is where I can see we have this 4-hour level right here, but we still have these lower highs right over there. And that is where you want to look for a perfect stop loss. So you don't put it above this high, because that is also a level where a lot of people are looking at, but you are putting it above this high right here, and that is where you put your stop loss. So what could be a potential trade right here is take a short trade at the daily level of resistance, put our stop loss right here, and try to ride this trade all the way towards the lower side of the range, getting a pretty nice risk to reward ratio of about 3. So this could have been a nice setup right here. And of course, on your way down, you are taking your profits, for example, right here or right here, and move your stop loss to your entry at one point. So that could be a very nice way to find a stop loss based on price action. If we then go onto Ethereum right here, and this is where we are looking at a trade based on a pattern. In this case, the triangle. To get the best risk to reward ratio right here at the level of resistance, you don't want to look for a long position, but this is where you already want to look for a potential short position. Same right here. Right here, this is where you are too late looking for a potential short position, because your risk to reward ratio is a little bit shit. It is hard to find a nice place for a stop loss. Let's say we looked for a short position right here at the level of resistance. This is where we would have entered, right here. And then we were looking for a nice level for a stop loss. So a lot of people would have been looking at this level right here, where we have entered approximately right here this week. But we can once again see that the price after this week right here went up one more time, stopped out all of those people who had their stop loss just above this week right here, and then had a nice move towards the downside. So another perfect example of an obvious place for a stop loss. This was the obvious place. That is where everybody put their stop loss. That is where they stopped out all of those people out of their long positions out of their short positions, then had a significant move towards the downside. So what should they have done? Well, right here, this is the price action that brought us towards the downside right here. So that is a definitely interesting area for your stop loss. So what I usually do is I make a range like this, and this is where you would have wanted to put your stop loss above, right here, above this area of price action that brought us towards the downside. Everybody was looking at this week right here when they entered a short position right here, but instead they shouldn't have looked at the obvious place for a stop loss, but they should have looked one step ahead of those retail traders. And those retail traders, no, they're not looking at this price action right here, they're only looking at this week right here, and that is where you make the big mistake. So yes, it should have been a nice entry, entering a short position right here, because if we break this towards the downside, you had such a nice risk to reward ratio, of course. If you would have entered a short right here, let's say right here, and you put your stop loss above that golden zone, let's say we had a nice breakdown towards the downside, we would have had a beautiful risk to reward ratio, of course, but they were all looking at the same area for their stop loss, which was above this week right here. But they should have looked at this price action right here, and that is the area that is the biggest resistance for the price right here, and that is where they should have put their stop loss above. So another perfect example of the market maker stopping out all of those people out of those short positions, closing the candle below the previous high, calling a swing failure pattern, and then we had a beautiful move towards the downside again for Ethereum. So once again, a perfect example that you should not be looking at the most obvious place for a stop loss, but that you always have to be looking one step ahead of those retail traders, guys. And this is one of the most important things that you have to control if you want to be a successful trader, in my opinion. So I really hope that this video helped you guys a lot, and that you guys are going to implement this stop loss into your own trading skills. And all I can suggest is to practice with this. Try to practice and try to look for the best place for a stop loss. Once again, don't look for the obvious place, but always be one step ahead of your opponent. In this case, the retail traders are our opponent, guys. That is, those are the people that we want to be one step ahead of, and that is the most important thing if you want to find the best place for a stop loss. So thank you for watching. If you like this YouTube video, make sure to subscribe to my YouTube channel and also smash up that like button. Follow me on Twitter and Instagram. Links are in the description, just as the links to our private Discord, but also to our open Discord, where I'm giving trade ideas, market lessons, and more. Thank you for watching, and I will see you guys at the next one. Peace.